What's up, YouTube? Welcome to another exciting personal finance video where I'm talking about things like gold and silver, saving, investing, all that good stuff. If you're into that, please like the video, subscribe to the channel, check out my website, My Road to Wealth and Freedom. I just published a couple new articles this month about net worth and passive income growing. And I share some of my thoughts on my strategies, where I see things going, and all that good stuff. But first, quick disclaimer, this channel is just for entertainment purposes only. I'm not a financial advisor, so please do your own research. Consult with a financial advisor before making any financial or investment decision or pursuing any of the strategies that I discuss on this channel or on my website. All right, guys. Well, it's been a while since I've posted. I think it was right around Christmas or just after Christmas when I posted. It's been super busy. Kids home from school, lockdowns, all that good stuff. But things are slowly getting back to normal, it seems. Hopefully, anyway. So I finally had a chance to kick out a video, and I seized the opportunity. And what a great day to put one out, because gold is back above the 1840 mark. Silver, after being in a rut for a while, is above $24 an ounce. And if you own any of the mining shares, many of them are up, almost 10% on the day. I saw Pan American Silver, Barrick, just a whole bunch of different ones. Some of the smaller ones, Equinox and Metalla, Royalties, all. So it seems to me, this on a day when most stocks are trading lower, it seems to me that, either people are kind of pricing in that maybe with a few interest rate hikes that the Fed and other central banks won't be able to tame inflation, or as what we're seeing over in China, there's this deflationary impulse. They have their property bubble burst. They got distressed property developers. Banks are taking it on the chin. All of their bonds are defaulting. So just basically more of the same, more chaos. And I suspect that's what's sort of influencing the prices of the metals and the miners today, as people begin to maybe factor in that central banks won't be able to tame inflation. Maybe they won't have the fortitude or whatever to basically crash asset prices and stuff like that. So in which case you'll see things like gold in particular, but also silver, explode in value. This has basically been the perfect storm for gold in particular, and also silver. Precious metals generally tend to perform well when there's this type of setup, I guess. And so yeah, I am anxiously awaiting and watching. And of course, in my last video I showcased my 1 ounce platinum coin that I picked up at a great deal. Got a Boxing Week sale from, I think it was TD Precious Metals. Anyways, that's all good. Still don't have it in a coin capsule. I'm gonna have to pick up some more. But in early January, that first week of January, I saw gold. The price of gold went down significantly. I think it was around $17.75 US an ounce, and I picked me up a brand new 2022 gold Canadian maple. It's not here yet. It's shipped. There was a little bit of a delay, but it should be here by the end of the week, and I hope to post that video. 2022. Canadian gold maple. I suspect it will look much the same as the 2021, only a little date change. But anyways, yeah, so basically I want to increase my exposure to real assets. I spent last year basically stacking cash, buying a little bit of gold and silver, but primarily paying down debt. And we're at a good spot now. The mortgage, we can see the light at the end of the tunnel. As it stands today, I think we only owe $23,000 on our home, and once that's out of the way, basically we want to kind of rebuild our investments, our passive income, and stack some more gold and silver. So that's the plan anyway for this year. And yeah, we'll just keep on chugging along. I'm a bit more optimistic this year that we're closer to the end of the craziness than the beginning. Again, I feel like there's been a lot of craziness in the markets. A lot of people have been gambling, speculating, pumping up asset prices across the board. Just what's gone on in real estate alone, I just feel like, a lot of people are going to get hurt when this whole thing unwinds. And it can happen in either way, I guess. It could be this deflationary bust, or it could just be a matter of interest rate normalization. I say that, a little bit tongue-in-cheek, because I think we all know at this point, when nearly every home you see is about $1 million, there's not very much room to normalize interest rates in this environment. So normal interest rates, I think they're thinking, is going to be around 2%. Maybe when the US 10-year hits 2%, that will be normal. But meanwhile, we got inflation running amok. And it's coming out more and more how concerned central bankers are about inflation. They've been doing jawbone, it's transitory, and then that story starts to change, and now it's going to be a little bit more persistent. And now, we saw in Canada, the finance department, there was some minutes of a meeting or some sort of memo that was released. Now, this happened back in, I believe, April or May of 2021, that they were really concerned about inflation, and they were really concerned that they wouldn't be able to get prices under control. And here we are, early 2022, and we are seeing a major inflation. I wouldn't call it like hyperinflation or anything like that, but we're definitely at 30, 40-year highs month to month, and we're seeing it all around us. The price of gas, the price of electricity, home heating fuel, food, basically everything that we need to survive is rapidly increasing in price. And meanwhile, some wages have moved. I see a lot of employers are trying to be a bit more competitive in attracting talent. They're offering sign-on bonuses, all sorts of little benefit packages, and everything under the sun. So this is the type of sticky inflation that a lot of the experts feared would stick around. And so here we are. How does this all end? It's anybody's guess. But I think at this stage, and maybe I'm wrong, but from what I can see is going on with the miners and on the market there today, I do feel that we are getting to a point where things are starting to things are starting to get out of control, and I think people are starting to wake up and realize the value of having some real physical wealth backing up their investment portfolios or what have you. So that's all I have to say for today. Just a quick update. The net worth, if you guys check out my website, My Road to Wealth and Freedom, link will be in the description below. Net worth is at almost 1.64 million. Now, I conservatively estimate the value of my home because I just feel like this is all sort of funny money now. So I just try to stick with, an assessed value from about 6-7 years ago. And I just basically, again, it's like, I feel like that, inflated asset values are that's illusory wealth. It's all an illusion. It's not really real, I guess, unless you go ahead and sell. But, all the live long day you can sit and pat yourself on the back about how much all your stocks are worth or your home. But the reality is, on a bad day on the market or a bad month or even year, things can go sideways real fast and asset prices can drop like a rock. So I like to keep any sort of estimate that I make very, very conservative. And which is why I tend to focus on debt, especially at this stage. I think if you're going to live in your house for the next, 20 years, 30 years or whatever, raise a family, whatever, definitely I'd be knocking down that debt even at record low interest rates. Just making the monthly mortgage payment is such an expense for the vast majority of people who are literally buying houses at the top of the market. They're saddled with humongous mortgages. If interest rates do go up even a couple percentage points, 1 or 2%, let's say, I mean, the amount added to their monthly outflows for mortgage expense and that, it's just going to be phenomenal. Even if you lock in, yeah, you've dodged a bullet for a few years, but the second your mortgage comes up for renewal, you could be in a bad spot. So that's basically why I just decided to play it safe. I went through the 08-09 crash, and I had hardly any real wealth at that time. I wasn't super, I wasn't in a great position, but I just invested hard. I really didn't have much to lose, so it didn't really matter. And I did very well. And in 2020, I started to pursue the same strategy. Basically, I was sitting mostly in cash. I was able to buy in, during the worst of it back in March of 2020. My issue, I guess, I sold out too soon. I sold out last year around this time into February. Probably should have let it run a little bit longer. Although hindsight's always 2020 in these circumstances. But I do know I am in a far better position. My family's in a far better position today than we were in March of 2020. And a lot of that has to do with our debt. Once this mortgage is paid off in the next few months, the amount of money we're going to be able to devote to, buying gold and silver, investing in even real estate. We're kind of maybe thinking we might buy another place, especially if the housing market really corrects and comes down, build our passive income. But the main thing is that our overhead monthly expenses or overhead costs will be dramatically reduced. Just imagine not having to pay, for rent or mortgage. Your housing costs easily eats up, 35-40% of most people's budgets. So all of that money freed up. It's just going straight into investments. We're just going to kind of basically, quote unquote, keep that mortgage payment and bank it, invest it, whatever. But the sleep at night factor, if you're 25 years old, you probably don't really care. You'll do what I did back in 08-09 and just, take huge risks, invest through it all. And that's fine. When you're 25, you're out on your own. Maybe you're with, a wife or whatever. You don't have, you haven't started a family yet. I mean, that's fine. That's, and that's basically what I did too. And nothing wrong with that. But once you kind of have a family, you're into your, early 40s, that's when you really want to kind of take a step back and really dramatically reduce risk. Typically to reduce risk, we've gone to things like cash or bonds, but in this environment, we're just getting killed. There's no point. It's just better to pay off your debt than it is to, put money into bonds, definitely, or even just save it in cash. So that's our approach. I'm sure it's all going to work out fine. It has so far. We're never going to be able to time any sort of market perfectly. I think at this stage in the game, everybody should have some exposure to precious metals. Virtually nobody does. Maybe they have some gold jewelry of some sort, but they don't have any serious position in it one way or another. And I think that's a huge mistake. I'm just fortunate that I came to that realization, fairly early on, and as have many of you. And it's not about putting 100% of your money into gold and silver. My physical amount is probably not even 2-3% of the family's entire net worth, and that's fine. But yet we have a starting point, and we for sure have more than the average person or average household. And I think that's going to be important in this, next 10 years of wherever it is the world is going. So, just a little bit of protection, a little bit of insurance, to kind of sleep at night. You know, if you have no debt, if you have some cash savings, you have some, you know, physical gold and silver, then you're in a pretty good spot, and you can take, you know, stomach the risk of investing in stocks, or real estate or whatever, and that you're not going to be wiped out. And I think that's really key for most people going forward, just to kind of diversify in a smart way among and within asset classes. So that's it, guys. Stay tuned for my next video. I want to kind of showcase that nice gold maple leaf. They're just beautiful coins. You know, it's always been my thing. I always regret it not picking up, you know, an ounce a year or something like that, or, you know, 2 ounces in a year. Just kind of something to have, something to kind of put away. And, you know, it can be an heirloom. Maybe you never need it. Maybe you never use it. The thing is, I feel like if you're responsible with money, if you're diligent in saving and investing and stuff like that, you know, then you can afford to kind of buy things like this and sit on it. It's not you need to make money on it today or tomorrow. It's just there in the background and it's doing its thing. You know, most days when the market stocks are tanking, you see Bitcoin tanking. What do you see going up? Gold. So it's just kind of one of those things, right? It's still, I feel like it's still unloved. Definitely a lot of people have exposure to it with paper products, stocks, or, you know, the GLD, that type of thing. But it doesn't hurt to have, you know, a couple physical ounces. You know, keep it, you know, either at home or a safe deposit box or in a vault somewhere. Definitely have a little bit. And yeah, you just never know when you might need it. And when you think about it, how many people have tangible, real wealth in an accessible place? You know, I see beyond, you know, maybe a few items of jewelry. I don't really think people have very much. And should worse come to worse, you know, we may need some of this. So anyways, that's my video for today. Hope you guys enjoyed it. Please like the video, subscribe to the channel, check out my website, My Road to Wealth and Freedom. It's down in the link description below. Thanks.